reality is the regulators have a lot of work to do because they're so far behind. This is the fastest adoption of any technology in all human history. So it's currently growing at about twice the speed of the internet, 113% a year in terms of number of users, where the internet grew at 63% when they were both at 150 million users. So as Lily said, we're at basically the internet in 1997. The regulators struggled back then, and it took a while to draft laws. Now, the issue is here is we want regulation because that will also create further adoption from the institutions. But if they create the wrong regulation, they're going to kill what is the fastest growing industry the world has ever seen. So that's a huge problem. And the issue is right now, Gensler is making it very clear that he has a particular hard line on what is a security. And that's what the whole debate is about right now. You know, KYC, AML, that's already being onboarded by everybody worldwide. So that's no issue. It's about what is security. So what is that discussion about? That is about a 1933 and 1934 securities law, which doesn't really make sense now. Additionally, that securities law is so onerous on businesses and innovation that it stifles it, which is why everything is in the private sector in Silicon Valley. You know, the VC world is so big, is because people can't deal with the regulation of listing shares. And they can't apply the same framework around tokens, these digital assets, because they are different than securities. They share many of the same attributes as securities. And I don't think anybody's going to get away without saying they're securities. We're just going to have to redefine what it means to be a security, because we don't really care what it's classified as, but it needs to be something that is workable, that allows this ridiculous pace of innovation that's changing the world, but to have a framework that avoids some of the fraudulent activity. Consumer warning should be there. I mean, we could all go and lose money in a casino in Vegas. There is no regulation. I can go and bet everything I've got on one spin of the roulette table, and there's no regulation. But for me to buy an early stage token might now be wrong because it's security. This whole thing doesn't feel right, and it doesn't play into the hands of this rich-poor divide that we've seen that's been so strong. It's because if you create things that are securities, you basically force only accredited investors to be able to buy them at certain stages. And that therefore means that you're only allowing rich people to get access. There needs to be a compromise in the middle of this, of what this actually is classified as and what that actually means. There's some merit to that because this is the first global product that is ubiquitous, available to everybody, and it's driven by retail, right? This is not an institutionally offered product from scratch. So this is a very different beast. It's come from the ground up and it's truly global, trades 24 hours a day. It has no jurisdiction. So it then becomes, what jurisdiction do you live in as a person? And so that makes it really complicated. And you will absolutely, without question, because this is the network of money and the network of value, if you try and over-regulate in one country, you'll force regulatory arbitrage. And if they want to do this properly, they need to think about that and do it at a light touch, globalized level. Would make some sense, but I don't know that that can be done. Because I mean that would take a decade to negotiate. And then the crypto industry's a $50 trillion industry, or $100 trillion industry. Then what do you do? What, do you go back and fine everybody? I mean, this is the madness of what is actually going on. They're going back and fining people from 5 years ago and saying it's okay, just pay the fine and move on. Don't admit any wrongdoing. I mean, that's what they've done to everybody. So the situation is so unclear that, you know, what it is actually doing, particularly in the US, is forcing people to set up the projects in Switzerland, Cayman Islands, Singapore, anywhere where they have a broader jurisdictional understanding of what it is. I mean, the Monetary Authority of Singapore have done a great job deciding how this should be done. South Korea has done a good job. But the US is so far behind because it's so focused on this 1934, what is the security and what it means, as opposed to creating digital asset laws. And the other thing to bear in mind here is they're still looking at protocols. That's where the regulators are, you know, is, you know, Solana a security or not a security? Meanwhile, DeFi, thousands of projects, Meanwhile, NFTs, tens of thousands of projects, and then social tokens are coming as well. So within the next, this industry is moving so fast that give it another 2 years. And well, if you extrapolate the rate of change, you'll have 1 billion users by 2024. And the range of products is vast. What are you going to do? Go back and penalize 500,000 projects? It can't work that way. It just can't. The question is why should they be regulated so tightly as well? We've seen the crowdfunding rules change, for example. There is an ability to start changing how that is done. We've seen the rise of SPACs. That's telling regulators you are you're creating excessive burdens on us to go public. And that also means that if your job as a regulator is to allow for participation within financial markets, you're not doing your job, because right now, as Ari said, is all of these giant unicorns are not going public because they can't. So that makes venture capital firms and wealthy individuals get access. They allow them to have access, and the retail investors end up buying it when the thing is now worth $50 billion and is trading at a P of 50. This is not fair, right? You've got a new technology like the internet that's growing even faster. And if the US persists with this particular way of regulation, they will lose the industry. And considering the US is the world's reserve currency and the financial powerhouse, this is not an industry you want to lose. There's a big battle line here. You need to win this, much like you had to win the internet. There is no choice. And what makes you...
I guess that's my question.
Yeah, the difficulty is who makes that decision. Now, there's an easier way, I think, which is much lighter touch, which is assume that everything over a certain market cap size is freely available to anybody. Then anything small comes with a risk warning to say, you have to do your homework on this, and you have to understand whether this is a legitimate earlier stage project or not. And something like that, much like you do when you take out a loan. You have a cooling off period. Maybe you can't have a cooling off period. Maybe you can with this. But something that puts the burden on the individual to understand the risk they are taking, as opposed to the voice of God saying, you shall not trade this token, but you shall trade this token. That's impossible in a space growing this fast.
But surely this is exactly what happens when you go to sell a stock. I mean, you do a prospectus, it has risk disclosures. I mean, isn't that what you just described?
Much lighter touch than that, because you'd have a pop-up on the exchange that would say, if you're about to trade your stock, you understand it's a small speculative stock, et cetera, much like you do when you trade options. You don't have all of this offering when you want to buy an option. You don't have any of this. You can pretty much do what you want. And we've seen that in Robinhood. So what you need to do is explain to people, this is a risky thing. It's okay for you to do it, but understand the risks. The prospectus, that makes no difference. There's so many corporate frauds. I mean, there's a whole industry of short selling based on corporate frauds. So that doesn't work either. It's got to be, caveat emptor. There's the only way that this applies here, with some guidance from the people who have more knowledge of the space and some simple blanket rules. Okay, if you're going to trade if you're going to invest via a US exchange, you need to pass a relatively simple exam to give yourself a license to invest. So then it's back on the individual to say, well, if you want to trade in this stuff, you need to understand what it is.